Hey YouTube, this is Zach with Achilles Financial. Today we're going to be looking at an earnings preview for Shopify Inc. This is one of the more pricey options and stocks that we're going to be looking at when we do certain stock reviews on this channel. The reason why I want to cover Shopify is because I do think that this company is going to continue to outperform, and I love what they're doing. So let's dive right on into it. And if you find this content helpful, please leave a like and subscribe. I am almost, or at the time of this video, I am almost to 1,000 subscribers and would greatly appreciate your support. So thank you for watching, and let's dive in. So again, Shopify, they will be announcing earnings on February 17th. The filming of this video is Monday the 15th. Hope you all had a wonderful Valentine's Day yesterday. And they are going to be announcing earnings later this week. The market was closed today, so we weren't able to exactly see any big moves over the course of the past few weeks. What we did see over the past 2 weeks, though, were quite a bit of a run-up. Granted, a lot of this came with kind of tech rebounding on last week, and that was largely after there had been a few down days for some of our larger holdings. So I think that this is some of that run-up, which leads me to kind of highlight that whenever you see a big earnings run like this, so again, keep this in mind, this is in the past 10 days. Let me show you kind of what that looks like over the past 3 weeks to put that in perspective. So the 10-day run kind of showcases right here that bounced off that $1,100 mark to go all the way up to $1,400. So keep in mind anything that we talk about right now. I do like the company a lot, but they are pricing in a lot into their current expectation of earnings. So keep that in mind whenever you're looking at options. The other thing that I want to highlight, if we talk about options quite quickly, and to talk about them, I did go to TD Ameritrade's Thinkorswim platform, is these February 19th, these weekly options, I am going to heavily encourage anyone to not make a weekly play on these options right here. So keep in mind that this is a shorter week, which means when the options market opens tomorrow, you essentially have the full day tomorrow. You have all of Wednesday and Thursday. They announce earnings, however, on Wednesday, so that means that you only have Thursday, Friday for that stock to really move. So if you're incredibly bullish or you think that there may be a run-up, I think that you're always going to do better by just going 1 week farther out. So you can see the $1,500 option here is going to cost you about $3,600. However, if you go to that same option farther down all the way to the ensuing week, you can see it's going to cost you about another $1,000 in premium, or really $1,200 in premium. So if you are not able to make that move right there of the call options or bullish, then I would recommend that you probably shouldn't be making the play this week, because these are pretty expensive options and a lot of that premium is going to be baked in. So if they don't have that big run of a 5 to 6% run, then you're probably going to get burned. So all that being said, I am exercising caution, but let's talk about how these type of companies move, in particular how Shopify has moved during the past few earnings. So we're back at the Shopify chart, and I don't know how well this shows up on the screen, but we've got earnings up here as well. You can see on May 6th, they had their earnings. Then we've got the Q2 earnings on July 29th, the Q3 earnings on October 29th, and then we anticipate announcing the next series of earnings this week. So what are some of the moves that we've seen? Every single time we've had this stock, or at least leading up to a positive earnings report, you can see that that was priced in and we saw a run-up. So if we look right here, then you can see that during this point in time, this is Q1 of last year, you saw that pre-earnings run-up, really the entire month up. Keep in mind, this is coming off of the coronavirus lows, so I'm not overly surprised. However, you also saw a bit of a sell-off leading up to Q2 earnings. However, then we had that run-up, including a gap up. This is a pretty big move right here. So we saw that already happen leading up into Q2. That all being said, as you can see during the November sell-off, If we look right here, you can see there was a pretty significant sell-off going into November. Keep in mind that during this time period, though, there was the election. So there's still a lot of catalyst. My only concern is that right now we did see a number of, or one of the biggest moves, at least over the past year. I think this is the largest 2-week move. I don't see anything else that would really compare with it. So the largest 2-week move we just saw happen. So which leads me to ask, why are people so bullish on Shopify? So again, you can see some of the earnings growth just over the past few years. Again, they are doing incredibly well with this transition to online services. So well, in fact, if we take a look at the fundamentals, which are the underlying pieces of the stock, I want to showcase something that is insane to me. So let's look at the annual view. So something you should be noticing very, very important right now is, yes, the cash is growing efficiently. Yes, total equity is going up, but they've operated all the way through Q3 of 2020 with no debt over the past really 4.5 years, which is insane for a company of this size. Keep in mind that this is a massive company. You're looking at total assets here of $3.5 billion. So this is a pretty big deal because a lot of that is not inclusive of any debt. If we go into the quarterly, well, they were $3.5 billion, $7.5 billion company. So monumental growth. And you can see that they've issued some debt to take care of this. This was a share offering or a note offering that they did in Q3 of last year. I think a lot of this was just to help them scale. I don't have any concerns with this approach because, again, they were doing very, very well and they needed some additional money to grow. You can even see why that may happen. Again, we can see the total revenue going up incrementally. This is the quarterly view. So keep in mind in Q3 of last year, which is non-inclusive of Black Friday, where they said they did $2.4 billion in sales, you're looking at that number being $717 million. So let's look what they did in 2019. In 2019, they did $1.7 billion. So keep in mind, that's not total revenue. Total revenue, they did $1.6 or $1.57 billion in total revenue in 2019. Go back to that quarterly view. They did more, or that same number in half the year in Q2 and Q3, and this is non-inclusive of Q4, where they had their largest sales day ever. So keep in mind that $2.4 billion is going through their platform. I'm interested to see how much of that goes to their bottom line. So a lot of optimism, and you can see that with the stock analyst that you've got here. I think that this hasn't necessarily been totally updated. I don't know how many a lot of these reports seem pretty up to date. But again, the company has had a monumental run up and they've kind of blown past that hold rating that was on them. So again, as we continue to go through this, I'm going to continue to emphasize be careful. Why should we be careful? Well, if you look at the valuation, they've blown sky high past the industry. You can see that price to earnings, the PE ratio, is up to nearly 930, which is an insane number. The price to sales of 72, again, industry leading and dominating. Price to book, 28. So that's the only thing that makes this company look relatively close to their peers. And for that reason, I could say yes. However, I don't like the overall run up, and this is a incredibly expensive stock to justify kind of these valuations. If we go back to the charts to kind of show you what this type of growth has looked like over the past 3 years, you've seen a stock that was really trading under $250 a share go all the way up to north of $1,400 a share and may hit $1,500 by the end of the week if they get a solid earnings report. But I think that there's a lot to unpack here. If we go back into that valuation, you can see why they're ranked so highly. Right now, they are taking a firm profit margin of 53%. One of the reasons I like this company is their net margin is 8%, and that was a higher number before they did their debt offering. So they are commanding a huge piece of the pie when it comes to bringing in additional dollars. So this is pretty incredible for a company of this size to be bringing in that type of money, and that's why you're seeing that strength go directly to the bottom line in their balance sheet. The big thing is, are they going to be able to continue growing EPS at 425%? Probably not. However, I think that they will continue to grow at a pretty healthy rate. Again, if they can get that 20 to 30% a year, those are some big numbers. The big thing that we want to look at is the year-over-year revenue growth, which is this number right here. This is the one that I anticipate will change going into the last quarter or the next quarter move. So this is the one that I want to watch to see, are we going to see their revenue continue to grow at the monumental rate that we have seen. So this is all just about the company. I want to now go into some of their Q3 filings to get an expectation of what we can look for. So what I have here on my screen is the Q3 2020 presentation. I'm going to scroll through this and skip a lot of this information. Again, this really goes through how does Shopify make their money. The big thing is they make it off of merchants and they make it off of transactions. Just one thing I want to highlight, this is kind of where they see themselves, kind of at the front end. Again, Shopify point of sale, their apps, their payments, they've got some capital, but really the larger that you get into the system, you kind of get phased out for them. Again, they've got a huge marketplace, but let's look at the numbers. So in a marketplace that has a massive volume and is incredibly competitive, they're actually holding steady with right at second place of the overall e-market sales. Again, Amazon, unsurprisingly, is pretty dominant in this space. Although you can see some of the other big players, such as Walmart and Home Depot and even Costco, are still on the list. And again, Shopify is probably the culmination of all of those bar Walmart. So they're definitely doing well. This is the slide that is causing them to demand such a high growth margin, which is that subscription solutions. So their subscriptions for 2020 is probably going to be the equivalent of their entire revenue in 2018, which is again another dominant performance. You can see that growth of 59%, 47%. This is where, again, you have some of these larger companies, it's more difficult to grow at 90% year over year like you see here. However, I wouldn't be surprised with the catalyst that 2020 provided a company like Shopify to see them grow all the way up to that 50% margin again. And you can start to see some of that benefit from the fact that everyone is going online. Again, this is showing you just the 47% CAGR, which is again just going to be that growth rate or calculated average growth rate. This is huge, and I think that it'll continue to happen. So if they can continue bringing in those subscriptions, companies like to trade higher over subscription statuses. And you can see some of that here, where again, revenue that is recurring is going to continue to drive an incredible piece of the puzzle and have a very high multiple when it comes to the trading. I think that's why you're seeing some of that running coming into play. You can see some of that strong, consistent growth, and I think that this is going to continue to happen. So this is all great. I think that what we need to focus on is this screen right here, where if they can continue this type of gross profit, they could be a billion, or I think they will be personally, more than $1.5 billion in gross profit this year, which continues to give them the capability to scale. Keep in mind that this is also a company that has a relatively low float, so the number of shares that are trading, so the stock can really move on good news. So they've got right at like 100 million shares, which for a company this size is not crazy, especially because they do trade at such a high price. So I think that there's a lot of capability for them to continue to grow. Again, this company is profitable despite the expenses that you see here. They're continuing to manage those expenses pretty capably. So the reason I showcase all of this information is because I think that it's going to continue to showcase, or the final picture is going to be very similar to this. And for that reason, I think that they're going to be in a good spot going forward. Again, just showcase this information. You can see that gross profit is growing at an incredible rate. So let's talk about what can you do knowing all this information that we have readily available. So we're back on TD Ameritrade. Here's Thinkorswim. This is what we've seen over the past week. Again, it shot up. I think that this is the earnings run up that people were looking for. I mean, this is a $100 move that you can see that really this all happened in right at a day. Look at the weekly options prices. Right now, this is saying that the stock is going to move essentially another $50, which is huge move. That's baked in here with the $54 pricing. What I'm looking at, if I were to make a move and I haven't decided, is really the March 26th. I think if we had the move, then what I would, or if we had the capability and wanted to make a move, what I would be looking at is really the 1595 and the 1500 debit spread. And I will have this up on the screen. So if you want to see this play right here, then I will hold it here and you can take a screen cap or go and copy the trade. But this gives us time by going out to the end of March. If we have a run up, we'll be able to take some profits. This particular trade is going to take right at $210 to do. Max profit $290, max loss of $210. And the way that that happens is the stock price finishes over $15.15, which again would be another huge move from where they're at today. So the reason I like this trade is because, again, you only have minimal input needed with that 210 compared to if you just look at one of those trades, it's going to cost you $9,000 or $9,370. And I think that for you to break positive on that, instead of 15.15, the trade has to go all the way to 15.87. And these are some huge moves for a stock that's already been moving a lot. So all that being said, I think that this is a great stock, but it's going to be volatile. It's going to be dangerous. And for that reason, I think you need to be careful for how much you're looking to put in just because the stock is going to move. This may even be one that it will be worthwhile to wait till after earnings to see what happens there. So again, is the stock a good long-term hold? Do you like the company? Yes. Huge yes to the company. I think they're incredible. I think they continue to dominate and they have a lot of catalysts. That being said, they're very expensive and I like to build up hundreds of shares so that I can do my options trading. And frankly, just to be honest with everyone on the call, or sorry, on the YouTube channel, I don't have, what would that be, right at $145,000. So $146,000, I just don't quite have that available right now. So that being said, I do like the company. I like the options potential. We'll see about playing it this week. I'll be watching it. But that being said, if you want to know when I'm trading it, or if you want to know who in the Discord is trading it, feel free to join that in the description down below. It's a lot of fun. We have a good time, and there's a lot of good stock advice. So if you made it this far, I appreciate you. Thanks for watching this video. And if you find this content helpful, please leave a like and subscribe. Thanks, everyone. Talk to you later. Bye.